One of the most challenging things to do when it comes to crypto trading and investing is deciding when is a good time to take profit, and more importantly, when is the best time to look to exit the market, and how do you systematically go about doing that? And that's what we're going to discuss in today's show. I'm going to give you 4 metrics, 4 things that you need to be looking at in order to determine when to start to exit the market and when to take some of those chips off the table. So smash the like button, hit the bell notification, and subscribe to the channel as there is a sea of green still on the daily time frame when it comes to the crypto markets. And we do have bank holidays both in the UK as well as the US today, which means that the stock markets will be closed, which means that the Monday range trading strategy, which we've been milking for the last couple of weeks, will most likely be more applicable based on how the Tuesday range starts to form. So we'll talk about that. We'll have a look at some of the low time frames as well. And let's get straight into it. First and foremost, just a quick overview of what's happening in the market. We haven't had a massive amount of liquidations over the course of the weekend, showing a lack of positioning by retail traders, right? Only $200 million worth of liquidations over the last 24 hours. And your ratios are kind of balanced over there at about almost 50-50, is about a 0.5% differential. Now, 4 things that you need to be looking at when trying to determine when to exit the market are these current indicators, right? First and foremost, if you look at Bitcoin's time spent in certain risk bands, right? You can think of this in terms of percentages. So this would be 10%, 10 to 20, 20 to 30, 30 to 40, and so forth, until you get to 90 to 100% in terms of how heated the market is and how heated the rallies are. And what we've historically seen is that price spends very, very, very small amounts of time, times only a number of days within that 90 to 100% mark, which is usually met by extreme FOMO within the market. So that's going to be one of the things that you're going to be looking for as it currently stands. If we have a look at where we've been currently situated, well, ultimately, for the most part of this cycle, we've been situated between this 50 to 70% region, right? And we spend about 400 days. So quite a lot of days within that environment. So make sure you watch the show each and every single day. I'll absolutely highlight when we do get into those categories. If we look at cycle 5, well, cycle 5 is our current cycle. We haven't got even once into the 80 to 90 mark, never mind the 90 to 100% mark, which means as soon as you start to tag that 80 to 90% mark, that would be one of the indicators that I'd be looking at to start to take profits and systematically exit the market. Now, you can do this in a couple of ways. You can obviously do the absolute full 100% unload, where you just exit everything in one go, or you can systematically exit based on Fibonacci extensions. We'll also have a look at in today's show where those Fib extensions are going to be lining up in terms of strong profit-taking zones, most notably the 1.618 Fib extension. And I'm going to show you the amazing confluence that 1.618 has with immediate time frame levels that we're looking at in terms of a trend line that's marked most of the major highs, right? So stay until the end. This is one of the data points that we need to focus on. I will highlight to you when we do start to get in there that we currently still in that 50 to 60% band, which you can spend a lot of time in. So it hasn't got overheated yet. The other thing that you want to look at is the crypto fear and greed index, which sometimes feels like it doesn't work, but historically it has actually provided really good results. And I think when used in combination with other charts, like I'm showing you right now, this becomes very, very valuable. So as you can currently see, well, we are situated at 73. So we are in the greed zone, but we're not yet in extreme greed. When you get into extreme greed, this is where a lot of the major tops have occurred within the market, and you spend very limited amounts of times within that area, right? Very, very similar to what I've shown you over here. Remember, 79 days in the 80 to 90% region is how long you typically spend in extreme greed, and 19 days in extreme greed, where things are pretty much in blow off top environment. So you can systematically sell into that if you do get into those extreme greeds, right? So the other thing we can look at is also the return on investment from cycle bottom, which is something that we focused on quite a lot ever since the bottom of the bear market, trying to map out and time how long this crypto cycle would last. And most notably, the at least base case scenario would put at about 1,100 days. Before I let you know where that places you within the crypto cycle, I just want to quickly review the poll results over here in terms of what we've asked under the comment section. I said, when do you believe a crypto top will occur, right? In Q2, which is pretty much now, before the end of June, within the next month, 2025. 13% of you voted for that. We have Q3 2025. So between, call it the beginning of July and the end of September, you have 25% of you that believe that the crypto cycle is ending then. And then we have September to December 2025, leading into the end of the year, the last quarter. 42% of you, the majority of you, believe that's where the crypto cycle is going to top, and that's where you're going to probably look to exit, right? And then we have 20% of you that believe that this is going to be a long, right translated cycle that's going to extend all the way into Q1 to Q2 2026, right? So very, very, very interesting data points over here. The way that I like to think about it is like a party, right? You know, I think that most people can go home after a party and say that they had a really, really good time if they left just before the end, right? Usually those are the guys that say they had a great time. You know, they didn't miss too much. Sometimes a fight breaks out. Crazy things happen at the party right at the end of the night. And I think that usually you're going to be better off playing it, you know, safe. Rather leave the party a little bit early. So we'll talk about when a little bit early would be and when late is going to be, right? Let's continue. So in terms of the trajectory, we said around 1,000 to 1,100 days. Now, if the cycle lasted 1,100 days, the base case, meaning that this cycle lasts a little bit longer than the prior two cycles that we've had, would place the cycle top some point between September, November. So September, October, November. And what's interesting about that is, of course, that is where the majority of you are voting, right? That's where you guys also think that the cycle is going to top. But the problem is you probably don't want to wait for everybody to decide that's where you're going to exit. And if you do decide that that's what you want to do, you have to have a plan. And the plan that I would utilize, should I want to hold on to the absolute end, that would be the equivalent of having your Uber ready to go. The guy's waiting outside. You're just paying a little bit extra to keep him there, but he's already waiting outside. All you have to do is step outside as opposed to scramble for your phone at the end of the party, hoping when a fight's already broken out or some other crazy things start to happen, that you're going to get the Uber driver to the door. When maybe you won't, right? Everybody's going to be ordering an Uber at the same time and it's going to block you, right? So therefore, the way that I play it is, if you are actually planning on waiting for Q4, so September, October, November, have a plan in mind. The plan in mind that I would personally utilize is this. I would make sure that I have a very, very small number of coins that I'm currently holding in a portfolio. And maybe you're trading beyond crypto. Maybe you hold a little bit of NASDAQ, S&P 500, Bitcoin, ETH, limited to under 5 positions. And the reason for that is it makes it much easier for you to cut those trades if need be. So if the market starts to put in a strong candle towards the downside and it looks like the whole market's coming to an end, it will unravel very, 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 very quickly. For those of you that haven't been here before, it's unbelievable how fast the market can unravel. And if you're only holding a handful of positions, 5 or less, it means that you should be able to cut those positions very, very, very quickly, right? So that's one thing that we're looking at over here. And that's under the presumption that this cycle plays out exactly like the green and the orange, which was 2017 and 2021. Because we have diminishing returns and lengthening cycles is what at least the theory suggests. We've excluded cycle 2 and cycle 1, which looks like that, right? Cycle 1, of course, we're not going to put in those kind of returns. And cycle 2, you can also see, was a much shorter cycle with massive returns. So diminishing returns, lengthening cycle, that would suggest yes towards the end of the year, right? So those are some of the things we'd look at. And then the fourth thing that I'd be focusing on is, of course, the M2 money supply, which you can see Bitcoin has been following pretty well, right? This has become a meme within the crypto cycles. For those that have their finger on the pulse of the market, you guys will know it. This has been a chart that's really made the rounds. The M2 money supply essentially shows how much liquidity there is in the market. And the theory suggests, because they're all theories until broken, right? They're all models and theories. Eventually, these models and theories do eventually break. And the model and theory suggests that as long as the M2 money supply continues to rise, then risk on assets will follow suit. And the Bitcoin price is pretty much directly correlated, but lagging by a certain number of days to what the M2 money supply is doing. And you can see the M2 money supply has been moving towards the upside. So according to this theory, you would put in one more dip that could possibly be Bitcoin dropping just slightly below $100,000, getting you your last opportunity into the market before catching up to the M2 money supply and rallying up to about $130,000. We're going to look at the confluence of that level in alignment with what we spoke about over here on the Fear and Greed Index, being in extreme greed, as well as this if it does possibly get into that 80 to 90% level based on those fib extensions, right? We need to see how these things all line up. So what we need to be looking at then is euphoria. We're looking for multiple markers that suggest, we're entering into the 80% plus in terms of the Bitcoin spend in various different risk bands. We're looking at extreme greed popping potentially over 90 for very, very short amounts of time. And then we want to line that up as well simultaneously with what's happening on the M2 money supply and has Bitcoin caught up to it. And then thirdly, we want to line that up with what's happening with the fib extension levels, right? Which is, let's actually go to this chart over here. I want to pull it into view. And it's this one over here, right? We need to look at what's happening with those fib extensions, because we would have the potential for triple bearish divergence with Bitcoin extending into this $120,000 to $130,000 region. What's interesting about that is if Bitcoin does catch up to the M2 money supply following a very, very short-lived dip over here, well, that is showcasing that Bitcoin should catch up into that $120,000 to $130,000 region, right? So the first very, very interesting thing. The second interesting thing is if we line this up with a couple of fib extensions and we can go from the recent high to the most recent low, so local high to local low that we have over here. And what do you have? What you have over here is you have your Fibonacci extension, which is lining up almost perfectly with that level, right? Let's highlight it in view over here. So there's your fib extension. We'll put a white line in. We'll make it nice and big. And that's coming in where? 130,977. We'll remove that for clarity on the chart. And that seems to line up pretty nicely over here, exactly with that point. So you have double confluence, right? You have the confluence of the rising trend line over there, which has matched and marked the previous highs. I've connected from wick to wick and as well from wick to body into the next wick over there to get the best possible area of interest. And it depends on when it hits, right? That would be, if it were to hit this week, 123,000 to 128,000. If it were to hit a little bit later on, you can draw this all the way through to that zone over there. That's going to be lining up some point towards the end of July. Then you're looking at about $131,000, which is your 1.618 fib extension, and possibly up to $136,000. Now, remember, you need to use multiple confluent factors. So if you see this happening and simultaneously your RSI is struggling to breach this level over here, that could be the possibility of that triple bearish divergence, right? So price putting in higher highs, RSI putting in lower highs, that's an indication that momentum is weaning and that you have to put in a correction in order for, of course, the RSI to regain strength for another opportunity to break those highs. Now, could you go higher? Absolutely, right? Absolutely. We need to reevaluate when price is in those particular levels, what is happening on these various different things, what's happening on the M2 money supply, what is happening on the fear and greed index, and how deep are we in terms of the Bitcoin risk bands, right? How far into the risk bands are we, right? So those are some of the things that we need to be paying attention to. But for right now, in terms of trend trading, remember we spoke about this. As soon as Bitcoin reclaimed the 21 weekly exponential moving average and angled upwards, this is a powerful trend, right? So you don't want to counter that trend. You might just want to look to take profits into some of the fib extensions. And then if price does come back down, find support back at the 21 EMA at a later date, reaccumulate, then it's possible that, maybe the cycles will extend beyond that 1,100 mark. So we're looking at all of these different moving parts all together, right? Not only that, but we also haven't had a breakdown yet on the Bitcoin dominance chart over here. We really haven't seen any form of an altcoin season. So how would that line up? Well, if you look at the total cryptocurrency market cap, this will be a predominant driving factor along to the M2 money supply to see if new money is coming into crypto as a whole. And if it is, and you see crypto moving towards the upside, we can do exactly the same exercise by looking at the total or the total cryptocurrency market cap in terms of fib extensions. What's interesting about that is, again, if you're looking at this from wick to wick over there, and you're using your fib extension, that puts it in at a 1.618 fib extension at 4.63 trillion. That's going to be a very, very interesting level, right? If you see price rallying aggressively up into that zone, and again, these factors start to kick into gear in terms of extreme greed within the markets. Remember, you don't spend that much time in that extreme greed zone. Then it becomes a very, very valuable point that you can utilize to see is the market potentially topping, right? We can do the same thing over here, and we can have a look at total 2, which includes Ethereum. So excludes Bitcoin, it's ETH and all the other altcoins. And just out of interest, I haven't looked at this until right now. How does this line up in terms of fib extensions? And I find that incredibly interesting, right? You can see the 1.618 fib extension comes into play over here at 2.15 trillion. The reason I also find it incredibly interesting is we have seen many cycles before. Once Bitcoin is already top, it starts to grind sideways and slowly move down once the top is in. And then you tend to see a rotation out of Bitcoin with new money flowing into the market, driving the total cryptocurrency market cap up, driving total 2 up, which means that your altcoins really start to rally. And what's interesting about this, and I'm not saying that this is going to happen, but what's interesting about this is we have our white vertical line with the dots that are running down the screen over here. And that lines up with kind of an area of confluence at that 2.15 trillion. And the reason it's interesting is because we mapped this out many months ago at the 20th of October, right? We said 20th of October as a potential area of interest for a top for total 2, right? So basically, if this were to take place, we would need to see mass acceleration in the coming weeks for total 2 to catch up and maybe meet that 1.618 fib extension, right? Let's do the same thing on total 3, which excludes ETH, and just see out of interest. You can see these are much sharper angles. So you probably want to also allocate into the body of the candle just to give it a little bit more of a gradual slope. And then we can do the 1.618 test over here and see where that lines up. And again, very interesting, right? It lines up exactly into that trend line over there. But this, in order to hit that, you would need a really aggressive move towards the upside. That would mean you'd need to put on 63% onto the total 3 crypto market cap in just the coming weeks to meet this, right? This is indicative of if you the inception point between the upsloping trend line and the 1.618, which let me just highlight with the box over here, is coming into this zone here at 1.47 trillion. Well, timing wise, that would indicate mid-July, possibly towards August, right? Mid-July to August, which means that you really need to see price moving aggressively. And something big needs to happen, right? Something really big needs to happen in the market to get this kind of acceleration very soon, right? Okay, let's go back to Bitcoin. So those are the things that I'd be looking at. We'll talk a little bit more about the other timeframes and some of the low timeframes. But in terms of longer term, that would be what I'd be using in terms of an exit strategy. I would be looking to take partial profits or even full profits coming into these key 1.618 areas, just in case there's any confusion over there, right? So what about Bitcoin right now? What about ETH right now? Well, if you look at Bitcoin over here on the 5-day time frame, and this really governs our overall trends and how strong the trending move is. As it currently stands, well, you had a swing failure pattern, right? I mean, that is a little bit of a warning sign. This is something that we're looking at. And coming into last week, we said, taking from this candle high, we basically push price all the way above. And you really want to close candles above that. If you do, that's considered a real breakout, and you're going to look at continuation. But you can see the candle close below on Bitcoin. On the 5-day time frame, this candle closed over here at 109,048. Basically confirming a swing failure pattern. However, when you consider the moving averages over here, they are pretty powerful, right? That's undeniable. You got the 3 above the 9, above the 30, all postured an angle towards the upside and starting to spread away from each other, which shows that bulls do still have momentum over here. And therefore, I guess we'll give it another 5 days to see if they can continue this move onwards and upwards, right? If you start to break below, you pretty much, into this range and take out that 5-day low, previous 5-day low, then of course the swing failure pattern is confirmed. But right now, bulls are holding on their 3 moving average and extending price onwards and upwards, which is a good sign. If you look at ETH is not postured as bullish yet as Bitcoin, but it's starting to attempt to reverse this overall trend. This is following the big move that you had up over here. You're now putting in a consolidation, also known as a bull flag, right? Big move up followed by consolidation equals a bull flag. And you can pretty much work out a measured move off of that. I know this is a high time frame, but essentially if this were to play out and you were to break towards the upside, this will very quickly send ETH all the way up to just above $3,300, which is the yearly open. And that was one of our previous targets that we had been looking at, right? So as it currently stands, looking at ETH over here, to me, this is just a matter of time before this does begin to expand. It's just a question of, does it continue to consolidate for yet another week? But in the coming weeks, at some point, there will be expansion over here. And then that expansion should lead to the same posturing that you're seeing on Bitcoin, right? Where you have the 3 above the 9 above the 30 MA. Okay, cool. Let's continue. So again, we're looking at this. We put a big question mark coming into the weekly close because prices were coming down pretty hard following that initial pump. And what we're really looking for, and I'll zoom into that, let's just clean this up. We said we don't want to see a deviation. And one thing we definitely don't want to see, and let's turn off the volume over there just to clean it up a bit. One thing we definitely don't want to see is any of these candles take out Wednesday's candle, which was this candle over here, right? This is Wednesday's candle, this candle over here. We didn't want to go below the wick low of that candle. If we did, we said the deviation is confirmed, and therefore we need to look for much lower prices, right? That fortunately didn't happen. If we pull back everything into view over here, what did we see instead? We saw price. Let's just quickly see where exactly our levels. There we go. So let's pull this back into view. Just let the volume profile reload over there. So we're looking at a trading range over here, and we said that's considered a back test, right? Which, as long as we hold above that Wednesday low, that's going to be a back test into support, and therefore you're looking at continuation higher. The only problems that we have at play right now are things like the bear moon, which is going to be coming up, right? So we had the previous bear moon failed. This was the bear moon over here. This bear moon, this bear moon over here, it failed, right? Consolidated price, and then you got the bull moon and price ripped. You're getting the next bear moon, which is coming up very, very, very soon, right? The moons don't have a 100% hit rate, but they have a very high hit rate. So continue to pay attention to this. Line it up alongside the rest of the TA. As long as price, doesn't take out, I guess, the recent lows that we put in on Sunday, then you're looking at continuation high. Previously, our invalidation on longs was Wednesday low. Now I would say look towards Sunday low. You don't want to take out Sunday low on a closing basis. Okay, liquidity. There is liquidity stacked overhead over here at about $110,000. That is in the form of short traders stop losses. Of course, it's a very valid short trade that people took. A swing failure pattern on the low time frame. Stop loss goes above that. No problem, right? Inability as per this to position. You can see in terms of liquidation levels are pretty low. Inability to choose a direction in the market and position. So you can see mostly flat on the deltas, which we drop over here in the whale room. And even some coins have negative fundings, right? Negative deltas over here on Sonic, negative deltas on Sui, negative deltas on POPCAT. And then you got the other big three, Solana, ETH, and BTC, pretty flat, right? Slightly negative on ETH, but I would consider this more flat than anything. So there it is. There's the one trade that we had been looking at. A lot of people are looking for the mean reversion trade back into the golden crossover here between the 50 and 200 MA on the daily time frame. These things do tend to act as magnets, but again, we need to be a little bit more precise on the analysis, and the precision for me would be this: as long as you now hold above Sunday's low, I wouldn't be looking for the mean reversion play. If you take out Sunday's low, look for the mean reversion play, and then price could pull all the way back into that cross, which is about $95,000, right? And that becomes a wonderful buy the dip opportunity. And then you can say that the bear moon is actually taking its toll and dropping price lower, right? Cool. Next, we're looking over here at the USDT dominance, which is coming down. This has been absolutely wild all over the place. You started to put in a big breakdown. You were heading towards the yearly open, and suddenly you just put in this massive sharp reaction, dumping everything in the market, holding this back into the trading range. And this thing looked like it was going to rip all the way up. You can see met the trend line, found resistance over here, and now it's starting to mark down once again. So areas of interest that you need to be careful of on your longs. Remember, if this goes down, your long trades play out and the market goes up. When this goes up, your long trades get wrecked and the market goes down. So where do you need to be careful of this thing finding support, right? The area of interest for me would be into this block, which you're about to hit, right? You're about to hit this area right now when it comes to USDT dominance. So be cautious as it approaches this 4.44, 4.45% into the equilibrium of that fair value gap over there, right? If this does find support over here, that's going to lead to a local top on some of the longs. and then this could start to bounce up. But this has really been choppy. It's all over the place. I would be taking major profits into the yearly open if it does get there, right? Cool. Let's continue. Daily exchange volume with the 7-day moving average, looking at how much money is coming onto the exchanges, and that creates an opportunity for things like the total cryptocurrency market cap to continue towards the upside, right? And reach those eventual targets as with total 2, etc., right? Higher highs and high lows is the name of the game. We'll refresh this a little bit later on today to see if we get another move towards the upside. But I really want to see this start to move aggressively, right? We've seen a shift in direction from December, January, we put in the local top. It was nothing but lower lows and lower highs. Now we've shifted that. High highs and high lows has started to take place, right? ETH BTC. We have to talk about ETH. ETH consolidating at a very key point. As per the 5-day chart that I showed you, we're still looking for major expansion up to about $3,300 on ETH. And hopefully that means ETH BTC also gets a little bit of outperformance. And this is what we're looking for, right? As long as it keeps consolidating above 0.02233, right? That's your 50% level, the purple line over there. Then it is looking good for potential continuation. And this has been a grind into resistance, right? This downsloping trend line, which we broke, had a little bit of a fake out, came back down, grinded into that. So it could be prepping for the next big move up, right? We'll keep an eye out on that for ETH, right? Here's your ETH USD pair. So remember, part of the longer term plan that we have is the move to 3,300. We think will be pretty explosive, something like that, right? Big move up to 3,300, explosive move up, leaving everyone behind. Then they'll FOMO buy in, and then you're going to smack it back down into mid-range support, right? That's going to be mid-range support, another buying opportunity. Then trade it to all-time highs at this 4K region, and then hopefully it breaks that and moves into price discovery, right? That's kind of the plan of action. And then what do you do in terms of your exit strategy? Again, same thing. Correlate to what's going on here on all of these charts, right? Correlate to what's happening on the M2 money supply, what's happening on the fear and greed, how much time is being spent in those risk bands. Subscribe to the channel. Follow me on X. There's a link in the description below. Of course, I'll update you if anything major happens within the market, right? Cool. Okay, so that's ETH. ETH still looking good over there for continuation. You had a nice move up over here. This is just tracking the 5-minute time frame. So we just had a little bit of a move up over there. I just want to continue to see that posturing of high highs and high lows, right? And if ETH does well, usually that's when your altcoins will do well, right? So we'll have a look at some of those alts in just a minute. Let's just quickly have a look at ETH on some of these low time frames over here. Let's just go on the 10-minute. Okay, so open interest hasn't built up too much on this move yet. Short-term traders are getting a little bit flushed over there, but it's not too bad. Let's quickly see on the hourly as well for BTC. So BTC, let's just see what's going on over here. Okay, also getting smacked over there on the hourly. These longs that piled up over here just got annihilated. A little bit of a drop over there in the open interest. Okay, not much to read over there. That all looks good. Everything is fine over there. Nice move up. Let's see on the hourly quickly. Okay, money flow is rising over there, so that's all looking good. All right, remember, guys, we spoke about as well last week, some of the real-world assets, and we said if ETH does do well, then some of those real-world assets will fly. We said that ONDO is probably one of the best ones to look at. You can see that ONDO is finding support here. Let me know in the comments as well if there's anything else that you want to have a look at in the meantime in terms of chart requests or anything. Feel free to drop those over there and I'll have a look. So you can see ONDO still maintaining those high highs and high lows, holding this support area at 90 cents, which is a good sign, right? That's one of the things that we're looking at over there. And then the other one that I wanted to talk about was multi-bank, right? Remember, we spoke about multi-bank, where they have one of the world's largest real-world asset tokenization deals at $3 billion, and they're getting involvement with, actual property markets and real estate in places like Dubai, which is totally thriving. The other thing that I wanted to mention is their token is going to be coming out soon, right? MBG is the token. For those of you that are interested in real-world asset plays that also extend further than that, it kind of can be classified in terms of exchange tokens as well. And we've seen how well things have done in the past, like BNB. Early investors in things like BNB made tens of millions of dollars. And the reason why I say that is if you look at multi-bank, These guys have some of the most amount of licenses in the world when it comes to CFDs, 17 licenses worldwide, and they're going to be launching their token MBG in a couple of weeks' time, right? It's set to launch possibly now in June, right? They have an aggressive 3-year plan that they're looking at in terms of what they want to roll out with exchange listings, CFDs, institutional demand. It's on ETH, so that's why I say if ETH does well, MBG will do well. And they have a massive buy and burn mechanism when it comes to their tokens, 1 billion token supply, and they're looking to burn, I think, like something like $60 million per year, right? Which is absolutely huge. So if you do want to look out for that, look at multibank.io, right? Multibank.io is going to be one of the places where they'll list the exchange, or the token at least. And then they're also going to list it on some of the other centralized exchanges. So I'll be keeping an eye on that. I'll be sure to update you guys, when that does actually come out. Cool. Let's see what else. What else are we looking at, guys? Is there anything of interest today? Cool. Let me know in the comments. I'm checking the comment section over there. We can see WIF. WIF is one of them. Sure, let's have a look at WIF. So market doing decently. Remember, today is Monday, but it's a bank holiday in the US and it's a bank holiday in the UK, which means that today can trade like a Sunday, right? Which means if we get giga pumps to the absolute moon, we have to consider taking short-term profits from those trades, because they say never trust a weekend pump, right? And this would essentially be the equivalent of weekend pump if we do get it. And we're initially looking on Friday for a weekend pump, but the weekend was very, very, very flat, right? I think Trump came out with his, for those of you that aren't in whale room, I was updating every step of the way when it comes to what was happening with that Trump news. He came out with a 25% tariff on Apple, and that caused a little bit of havoc in the market. Okay. All right. We'll do a couple of requests over here. All right. For those of you also that are looking for a place to trade before we go into the requests, use the link in the description below. We do, of course, have Bybit, $30,000 sign-up bonus for those of you that use that specific link over there. This is one of the preferred places to trade, one of the most trusted exchanges that is out there. All right. Let's go onto our high time frame charts over here, and then we'll do those requests. Okay, this chart. Cool. So let's quickly have a look at SUI following the hack. These long trades still stand. There's nothing wrong with these. In fact, I have even more confidence in these trades today than I did previously, because yesterday we had an attempted breakdown. Price failed to break down, closed as a nice reversal candle, fulfilled the 𝗥𝗡𝗢 strategy at 50% over there. And therefore, I think that's the long opportunity. So I think that conservative target, $5.32 for something like SUI in terms of a long trade. Just be careful of that bear moon, right? Sol, exactly the same thing over here. Looking at extension all the way up to the previous all-time highs at $260. That's giving you a beautiful 46% move. Really, really nice there on Solana. Let's look quickly at Sonic. Okay, Sonic eventually came back down into the key support area. So now you're looking for low time frame opportunities of reversal. If we go into the hourly, let's just see. We marked out the areas of interest over there. 1, 2, 3. That's the move down. We haven't really broken any structure yet. So you still need to see a bit of work on the low time frames. Start to clear some of these levels, and then you can look to buy pullback. So something like that. Look to buy pullbacks. That will be your first major high low. You'll probably get in even a little bit lower than where we're currently at on Sonic. Okay, back onto the daily time frame. Let's see NEAR. Okay, NEAR also holding up. You get an even better entry than previously. Really, really nice over there. Good entry. Price holding the line at major support. And therefore, I'm going to quickly reduce this a little bit to give you the true risk to reward, because now you have a beautiful stop loss as well. If you took the trade initially, you wouldn't have been stopped out, but now you have a nice invalidation below yesterday's low, and you'd be entering in over here at 285. Let's just make this absolute perfect over there. There it is. So 285 entering here, looking for 96% move towards the upside, all the way up to $5.60, right? Those are some of the trade opportunities. Let's just look on a low time frame over here, see how specific we can get. All right, I like the move that you had up over here. I don't know, there's a fair value gap on the hourly. I'm not convinced that you're going to come back for that, but I guess that would be an even better entry, right? You'd be looking at something like this. I'm just going to put a box within the box, but you should see it. There it is. And what you can do is you can just mark out pretty much into the mid-level over there. So mid-level, is 273. Again, I'm not convinced that you're going to get that, but that would be the sweetest entry ever if you saw something like that. Stop loss goes below here, entry over there, and then you can target this all the way back up. So that is near as a trade opportunity. All right, back on the daily. All right, cool. Let me know, guys, in the comments if there's anything else, anything important that I'm missing over here. A quick look at Casper. Okay, I don't love it, but it's still doing okay in terms of high highs and high lows. Yesterday's candle also looks like a major low within the market, so that's okay. Let's go to hype. In my opinion, this is way too overextended. I definitely would not touch this. If you hold it from the lows, no problem. This thing can continue, but from the low to the high, this has already put in a 326% move with no real pullbacks, right? So I think eventually this thing will flush hard, and you need to be careful and aware of that. BERA chain, right? Okay. Failed this level, stopped out. That trade stopped out, but we kept relatively tight stops, so you can relook for longs again, but it's a random coin, so probably I'll just leave it until it gets back inside the range. AVAX, also holding the key level over here. We spoke about coming into the fair value gap last week, and it did that on Monday, held that level. Everything is looking fine there for continuation, at least to this level, $30, right? Okay, Aptos was another one that we looked at in terms of a long. Again, more confident on the long trade now. You can raise your stop loss slightly below yesterday's low. That's looking good. Price is back to the original zone that we gave as an entry, and that's 100% move from here to there, to the top. All right, cool. What else, guys? What else? We can go to, let's quickly check POPCAT. POPCAT USDT. Let's have a look. All righty. Okay, also a nice flush out yesterday, right? Look at that candle. Really, really good. That could have been the flush out candle, and you could be looking at continuation. But always a risky trade when it comes to these meme coins. Track your stop loss underneath and be careful. Okay, Jupiter. Let's have a look at Jupiter. Let's see. Jupe USDT. This is, of course, the trading decks for Solana. It's got a lot of work to do. I do think that yesterday's low is your invalidation, just like many of the other coins. Higher highs and high lows is the name of the game. So all you need to do is pretty much just track underneath yesterday. If you break under yesterday's low, exit the trade over here, and then just keep riding the trend. You are going to meet that underside resistance at 68 cents though, and that's going to be a big level to contend with and get through. If you can flip that into support, you're back in the trading range, and then you can start to trade, higher towards mid-range, and then all the way back to the range high. Alrighty. Okay, remember to pay yourselves if you made profit, right? If you've been making profits, pay yourself. Let's double check 𝗪𝗏𝗡 as well, USDT. Let's see, wait, just one sec. Let's just remove that R off the end there. Okay, 𝗪𝗏𝗡, how's 𝗪𝗏𝗡 looking? Alrighty. So we spoke about this one a lot, saying, it's not great. This has got a lot of work to do. This is going to be a super big level if it can even get there to start to reclaim and get above. Look, I do think if you have total 2 and 3 rallying, and we make it all the way up to that 1.618 fib extension, based on everything I've just shown you, then most of these coins are going to get there above these levels and higher. But it's just the risk to reward, right? You got to look at what your risk is, and you don't want to be stuck with a coin that's not moving. So this thing can range for long. I remember I learned my lesson once before on something called energy web token. I don't know if you guys remember that. I looked at the deviation below the bottom of the trading range, and I thought, bang, we bought the bottom. And then what happened is the thing just ranged like that for literally like a year. So yes, I was up like 50%, but 50% for a year when Bitcoin could have doubled or tripled is not a great hold. There's better opportunities out there, and that's a lesson I learned. So I hope you guys do too. Okay, cool. Let's see. HBAR. Sure, let's have a look at HBAR. I know HBAR is one of the so-called US coins. So it did have that pump when Trump mentioned buy crypto, given up most of that since. Right now, I just view it as ranging. So our range levels are still pretty accurate over here. We can maybe tighten some of these things since we've got a bit of new information in play. There we go. Let's look at that. Let's just quickly mark at the mid-range. All right, HBAR. So let's grab our mid levels, 50%. All right. High highs, high lows, but range bound. So I guess the closer you can buy towards the range low, the better. If you are interested in that, something like that. Over there, break the trend line. You got down sloping trend line. Then you target the mid-range. If you can get and hold above the mid-range at 26 cents, target to the range high. And I guess if you break and hold above the range high, then this thing will cook. All right. Amazing, amazing, amazing. Cool, guys. We'll be doing a lot more requests as well in Whale Room, which is the Discord. Remember, if you're not already in the Discord, there is a link in the description below. This is where we show all of our trades, right? We take everything over here. Low time frame trades, high time frame trades, scalpers in here. We got absolutely everything, institutional data that we update you on. Absolutely everything is over there in the description. If you go over here, there it is. There's Whale Room. So that's it from me, folks. I'll see you all on the next one. I do hope that you have an absolutely wonderful day wherever you are in the world, and we'll see you soon. Cheers for now.